I try to open myself up. It's okay. You're new to this. When I had a couple houses and what I've seen my clients do, how do I provide the right advice? What did I get myself into? What they get themselves into? I think starting out small, especially if you want to be a long-term hold, starting out with one and seeing if you really want to become a landlord long time, or as you grow, will you want to put in place a management company? Whether you start your own management company and hire somebody to do it, or do you find a management company out there that exists that has a good reputation in your market and hire them? So if you want to be a landlord, let's slow roll into it, because the last thing you want to do is buy 10 houses and be a landlord and get 3 calls at 3 a.m. and you're getting out of bed, going to change toilets or fix electricity, right? That's the last thing you want to do.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is a lender based in Indianapolis with a banking background who helps clients navigate their financing needs with expertise and strategy. Please welcome Gavin Fisher. Gavin, welcome to the show.
Thank you very much, Dylan. Excited to be here. Appreciate you having me on today.
I always like to start off at the top by asking folks how they got into the real estate space.
Yes, great question. So for me, it's kind of been a roundabout journey. As you mentioned, I've had a banking background, and when I first got into banking, I had some clients that were in real estate, owned a bunch of properties, had them as long-term rentals, and I became more intrigued as to, okay, never heard of this, doesn't really make sense, so let's learn more. So I started asking more and more questions, found out that it's a great space and that obviously real estate is a good asset to have. And if you got people paying you to live in your own house, then it makes sense, and you're making money and you're gaining value. So over time, I never thought I would necessarily be the owner of some real estate, but my wife and I did end up having a couple of rentals ourselves that we sold maybe 8 to 10 years ago, and we're out of the game. But I always like the idea of helping people live that dream and saying, okay, I've got a house that needs fixed up. I want to fix and flip it, or I want to buy it and hold it long term. How do I help them? How do I come in? Of course, being with the banking, the finance background, it's the money side of it. So how can I help those people buy those properties?
I want to ask you about the lending space. There seems to be so many different niches within lending. And coming from the distressed real estate side, dealing with a lot of investors, distressed properties, I'm familiar with hard money lending. But now, because of different market pressures and working with more investors, I'm familiar with DSCR loans. But then as a realtor, I'm also familiar, of course, with the traditional side of things. Are there now more niches than ever in the lending space?
Absolutely. There's flavor for everybody out there, right? You go to your local ice cream shop, they got 20, 30 flavors. It's kind of how real estate lending is these days. And the goal, if you are the investor, you're trying to buy that property, is to figure out which true lending niche you fit into. And it's not always easy, because you're right, in our head, we say, hey, we need this style loan. And then if you go that route, you might figure out, oh, shoot, I should have done something totally different, but now you're too far down the path. So yes, there's a flavor for everybody out there, no matter what you're looking for: fix and flip, DSCR, bridge loans, you name it, it's there. And it is hard to navigate, and also where to go.
I want to ask you about going from banking to lending. I think that this is really a great transition. I think I'm maybe selfishly, because I work with so many investors, that I wish more people in banking maybe did this, because I hate to say it, Gavin, because I don't want to make it sound like I'm complaining. I don't like that. But when I was working with some investors, you would get these approvals, what looked like, and then the day before closing, the lender would say, "Oh, well, we need this, we need this." And so I've said this before on the podcast. It got to a point where I was like, okay, we need to I need to vet these lenders before I just accept this approval, or my investor telling me that, hey, we're good to go, we're good to go. So I started saying, no, I need to talk with your lender. I need to have a conversation with them, because I need to know that we're not going to have something come up the day before closing.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yes, I wish I had a magic wand and I could tell you exactly how to get by all that. That does still seem to come up quite a bit. The thought process is, and when you're out there trying to find somebody to help you, is you get a lot of clarity up front. Like you said, I want to talk to the exact person. Hopefully you can get all the clarity. Here's how the process is going to work. You're going to need these documents today, these documents, 2 weeks. We'll get an appraisal back. Then we're going to need 3, 4 more things. Inevitably, in lending, with my banking background, whether it was a simple car loan to now doing this, something always comes up at the end. And if you're working with the right partner, it should be get mitigated pretty quick, or maybe a solution's put in place. If you need something and you don't quite have it, hopefully there's a quick workaround and you know that in advance.
I think it's interesting. I don't know if I mentioned to you before hopping on the podcast here. I came from the automotive industry. So I worked for Nissan for a handful of years. I worked for Stellantis for a handful of years. And so, of course, that's totally different asset. We're talking about cars that depreciate versus houses that appreciate and real estate that appreciates. And I think one of the interesting things, and why I love real estate, why I'm passionate about it, even if there was the money aside, right, is the idea that you can purchase something that holds value and appreciates with time. It does not depreciate in the US, we're talking, right? Versus you go and it really, unfortunately, doesn't matter what car you buy. It feels like 5 years later, it's worth less than 50% in most cases. And so I'm curious to get your perspective when you're dealing with newer investors and they're asking you maybe questions about, hey, what should I get? Should I get a duplex? Should I get single family? Should I get a bunch of units? Because maybe it's safer for me to start with a bunch of units. What advice do you have folks who may be starting out and looking at their first asset to get into?
Yes, good. No, that's great. And there's a lot of advice out there. So first I'd say find somebody that you trust, whether it's, me or Dylan, and maybe they call you directly, right? Find somebody you trust to give you the advice, because everybody's got an opinion, but everybody's opinion falls to the way they look at things. So I try to open myself up. It's okay. You're new to this. When I had a couple houses and what I've seen my clients do, how do I provide the right advice? What did I get myself into? What they get themselves into? I think starting out small, especially if you want to be a long-term hold, starting out with one and seeing if you really want to become a landlord long time, or as you grow, will you want to put in place a management company, whether you start your own management company and hire somebody to do it, or do you find a management company out there that exists that has a good reputation in your market and hire them? So if you want to be a landlord, let's slow roll into it, because the last thing you want to do is buy 10 houses and be a landlord and get 3 calls at 3 a.m. and you're getting out of bed going to change toilets or fix electricity, right? That's the last thing you want to do.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Then if we look at the fix and flip side of things, it's okay. Your first one is where you're going to learn. You're probably going to lose money. You've never done it before. So if you're trying to do it all by yourself without bringing in some experts or people that know a little bit more than you, you're probably going to lose money. You said your budget was 30 grand. It ended up being 50. You bought the house at 75. You thought even the appraiser said it'd be 200 when you finished, but then you cut corners because you realized the budget was out of whack. And now the 200 is really 175. Right. So you just take that on the chin up front and say, I'm probably going to lose some money on this, but that's okay. I've learned the ropes. I found some good partners. Flip 2, 3, 4, 5, and 100. Now I'm going to make a lot of money on. And I think the reputation or what we see on social media is, I bought this distressed house and I made $100,000. Sometimes it happens and sometimes it doesn't. So we hopefully are realistic going into it.
I want to ask you about your niche within the lending space. Is there a specific niche that you're most enthusiastic about, or where you see a lot of clients coming from, or where you really feel like, hey, this is what I'm going to specialize in?
Yes. I'll say it's easier on my end of things from lending space to do one to 4 units, right? Single family style, because there's less involved and expenses are typically less in the 1 to 4 family. So I really like working in that space because I feel like things move faster. When you get into the 5 units and up, right, it falls into commercial buildings,
Right.
commercial lending, and a little bit more rules come into play. Appraisals typically are going to be more expensive just because now it's deemed commercial versus residential, but 4 units to 6 units really isn't a difference, right? It just happens to be on paper. So I really like the single family 1 to 4. Like I said, I think it's easier, and it's easier to help guys, especially new investors, through that space. But I do feel that a 10, 20 unit is a good size for folks when it comes to an
Yeah.
apartment building. Small apartments is great. Good cash flow can be there if you do the property right, if you buy it right, put the right rents in, get it up to a point where it's stable, and then try to get out of it. That's the goal. So that 10 to 20 units is a good spot for me, and then the 1 to 4 is another good spot.
I want to pivot a bit here, Gavin, and ask you maybe a regional question about real estate out there in Indianapolis. I am licensed in Texas. I lived in San Antonio, in Dallas, Texas. I'm familiar with some of the other markets. I know very little about Indianapolis. Is it very investor heavy right there? Is the city expanding? What's it like out there?
Yeah, that's awesome. So it is. It's very investor friendly. The the values of the homes, kind of as you mentioned at the top of the show here, don't really sway too much. It is truly an asset that's going to go up. We look back to 2008 when we had the boom in places like Florida, New York, California were getting hit hard. Not that Indianapolis saw soar in real estate, but the values didn't drop in Indianapolis and the surrounding counties like they did across the country. And
Right.
so it's fun when we talk to other lending partners out there that are going to help us do, we're a little nervous about this or that. And then it's coming back to coach from, hey, we're in the Midwest. Indianapolis is always pretty stable. We see a constant 1 to 3% increase in value of a home, even in bad times. So things are good here. And we're driving industry. I say we like I've got anything to do with it, but the folks in those power positions in the state are truly trying to drive industry to the area, and that's really helping with bringing more people in to work, live, so on and so forth, to have these rents continue to rise, which is nice.
I want to ask you about how you've seen the business change over time. I mean, I know I got in 2023, and I've seen there's been change since 2023, let alone since 2020. And I think DSCR loans is one thing that I've seen with more and more popularity, especially working with investors. Have you seen any major trends or maybe things fade away since you got started in lending?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
You hit the nail on the head. DSCR has taken off. I think it's a great product. Coming from my banking background, which banks typically don't like to do investment real estate, right? They prefer owner occupied. Some small community banks will do investment real estate because they kind of get it, but they still underwrite it they were underwriting as a true loan. We're getting tax returns. We're going through personal financial statement. How's the individual's true credit score and all those things to figure out if they can pay for the extra house without really considering if it's rented or not, right? That's how a bank typically looks at it. Now, fast forward to 2023 to 24, DSCR is getting hotter out there. Now some banks will have a DSCR division. So DSCR is really coming at it, and lenders and general banks as well. They're starting to look at these investment real estate people out there, these investors out there, and these assets and say, wait, if you paying me $1,000 a month, but you got a $1,500 a month rent, you should be approved for a loan because the ratios, right? The 1,500's covering 1,000. Okay, we're good. Give or take some other variables. And I think DSCR is fantastic. It really looks at the asset and what you're doing as an investor versus who you are as an individual. I mean, no matter how much money you have or lack of money you have, maybe you've made a mistake in the past, but if you know how to run an asset and grow that asset, you should be able to get dollars. Same with the fix and flip side. Fix and flip's a little trickier because you've got to have more experience, right? The first one's always tough. Then the second, third, and fourth, you're getting better. So the experience side, and that does weigh a little bit more on the individualized investor. Hey, if this thing truly loses money, is the bank or is the lender going to get paid back, right? Am I going to get paid back if all of a sudden that value went from 200 to 175 and his budget was out of whack? That's tough. But with the plethora of options out there to cover everybody.
I want to ask you, for folks on the other side who aren't investors, but maybe looking, younger folks, college graduates, so on and so forth, who are trying to get in their first home and maybe feel like, man, this is really hard. Am I going to be able to get into a home? They're looking at statistics and they're seeing, whatever percentage of people in their 20s and 30s are homeowners. And they're maybe thinking, well, maybe I should be looking at maybe an older home. Do I need to be looking at new builds? Or, hey, I've heard maybe I need to be looking at a duplex. What's your advice to folks who are on the opposite side? They're not investors, but they're trying to get into their first property. Should they be looking at new builds?
I think it depends on the market you're in. I would say if you're not an investor and don't necessarily what work, new builds are probably the best way to go because you're going to have less headache, or you got some warranties on things. Appliances maybe already have warranties. The build structure has warranties. So you have less risk as a new homeowner to get into it. The flip side of that says if you've got any type of creative bone in your body, or, hey, I like challenges, then buy something older and then fix it up and then decide, oh, you know what, I really like, this is my own home and I took pride in fixing it up, but shoot, I should go buy another one of these down the block because it looks ratty. I want to fix it up because I live here now and I want my next door neighbor to look good. So let's buy that house, fix it up and flip it or rent it out long term. One other thing, the home hack, you mentioned duplexes. For those who are wanting to buy a first home, not sure affordability or if they want it, if you can buy a duplex and have a tenant on the other side that can cover the whole mortgage, I mean, that's a win-win, right? So if you go to get financed and your mortgage once again is $1,000 for the whole duplex and you got somebody paying you $1,000, boom, you're offsetting your own mortgage and kind of living for free. So for those new home buyers out there, think about a duplex and having one side be a tenant, and then you kind of live for free, which isn't a bad way to go.
I want to ask you a granular question, Gavin. Maybe I've said this, give away some of the gold, but not the whole bar. If someone is in that position, they're not an investor, maybe first time home buyer, maybe they really don't know how to go about the process and they're overwhelmed, right? And they're thinking, well, what's going to be the path forward of least obstacles, the easiest path forward? As a lender, is it very much regional? Are lenders going to tell you different things regionally, new build versus, older home versus duplex? Or are there kind of some general guidelines that you would give folks as a lender?
It could be regionally. I would hope it's more across the board with the answer, but obviously regions have to come into play because you got to help people find the right pocket that fits their needs within neighborhood or the city, what have you. But I would say first time home buyers, just like investors, the first time you buy a house, you want it to be as perfect as possible. So you buy it thinking it's perfect. You come out and it's not going to be perfect. You're going to get in there, your HVAC is going to break within the first 3 months, and you bought the thing in July, you're hosed over, right? So you got to kind of know going into it that I need some cushion, or I want to truly work with a realtor to buy this property right, knowing that my inspection came back and said the HVAC's 15 years old or the roof hasn't been repaired in a little bit. And you're so excited, it doesn't matter. You're going to buy the house no matter what. It's my first house, or maybe you
Right.
just got married, you and your spouse, like, hey, we're doing this together. This is what we want. But take note of the inspection and say, what does that inspection come back and say? And what's that mean? And hopefully your realtor is going to say, hey, it probably means in 5 more years, HVAC is going to go out. It's going to cost you $10,000. So be prepared for that. Hey, the roof is bad. Hopefully you get another big hailstorm coming through here in another couple months, and now your insurance will cover the roof or something. But that advice, I think, is what folks buying a house for the first time need to get. And the lender, our responsibility as lending is to say, hey, this is what it's going to be, but ask some of those questions. We should be asking those questions. What did the inspection come back look like? Hey, the appraisal came back not as good as we thought, even though it covers the sales price. Do you really want this house, or is there other houses on the market that you should go look? At the end of the day, you got to be happy with the house. New builds, kind of like a brand new car, is going to come with a better warranty, right? So the new houses
Right.
come with better structure, better warranty to it. Older houses, you got to go into it just knowing there's probably going to be a problem. And I'll be honest, the first 3 houses my wife and I built, within 3 to 4 months, we replaced the HVAC system, AC and furnace, the whole thing, in 3 of our first houses. And it's like never fails. Like, man, we can't get a break. And that's just how it worked. So we have bad luck on that. That's why I brought that one up.
You got to definitely proceed with caution and careful planning when you're looking at anything, pre-owned in the real estate space. I want to ask you a follow-up question. You mentioned better warranty, comparing it, to the automotive space. New homes, as a lender, are lenders generally favorable towards new homes for first-time home buyers, or is that not the case and maybe a misnomer?
That's a good question. I'm not sure. I'm not sure that's the case. Uh, from my perspective, I don't look at it that way. I'm truly looking at, hey, what can we afford? Does this make sense? How do we get in there? Can we buy it? Can we really appreciate this? If your area is building new, a lot of new, so right around Indianapolis, there's a lot of new builds. I would
Yeah.
lead for a first-time home buyer to go new. The reason I say that is even if you're buying an older home, there's more new construction, which means there's more new growth. So where are we growing? And that's probably an area to go be, especially as a younger person. I would say there's more opportunity up there, not necessarily work-wise, but your neighbors could fit in the same mold, right? Or if you plan on having a family, the family dynamic is a little better in those
Yeah.
growing areas because that's how those neighborhoods are scaled to. So I can't say you don't favor it as a lender per se, but I think the advice is to favor it from a new home perspective. You get to pick some things you want, ground up construction, or hey, it's newer, maybe you can still change some things in it versus the old home that you got to put more money into to change those cabinets to the right color.
I think a lot of people will be interested to hear that, especially people who maybe just starting out. And on the flip side of things, with DSCR, there's just probably so many more opportunities right now, specifically. And then we didn't even get into like AI and the way that tech is influencing people to make decisions, but it seems like real estate is the first adopter in so many use cases for some of these things. But Gavin, we are coming up on time here. Where can folks go if maybe they're in the greater Indianapolis area and they have a deal that they'd like you to look at and see if they can get some lending on, or if they'd like to reach out to you and make contact with you?
Sure. No, thank you for asking. And not only do we handle Indianapolis, we can handle outside of Indiana as well. So for those folks in some other states, maybe around the Midwest, Ohio, Michigan, Illinois, what have you, feel free to reach out as well. Ramsheadfunding.com. That's RAMS ramsedfunding.com is our website. So go reach us out there, and you can reach out to me directly. My email is Gavin, that's Gavin, at ramsedfunding.com. And our goal at what we do is to take an investor and match them up with the right capital source, marry that together, get you your first house or your 100th house, doesn't matter. But ramsedfunding.com and Gavin at ramsedfunding.com, and we'll help connect the dots and charge you forward.
Gavin, thank you so much for coming on the show here today.
Awesome, Dylan. Thank you very much for having me. I appreciate it. Look forward to helping all your listeners out there.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.